Good morning, and welcome to your pre-market report for Monday, July 20th, 2026. Let's take a quick look at the global cues, domestic trends, and stocks to watch before the markets open. U.S. markets closed sharply lower on Friday, with the Dow Jones falling 0.77%, the S&P 500 declining 1.01%, and the Nasdaq Composite dropping 1.40%, as the sell-off in semiconductor and AI-related stocks intensified. Investor sentiment was also weighed down by escalating U.S.-Iran tensions, which pushed crude oil prices higher, while energy stocks outperformed as the broader market ended the week on a weak note, despite a solid start to the earnings season. Asian markets are trading cautiously mixed today, as investors weigh rising crude oil prices and renewed geopolitical tensions in the Middle East against optimism surrounding the global earnings season. Japan's Nikkei is closed for a public holiday, while Hong Kong's Hang Seng is trading with a positive bias, supported by financial stocks. Overall sentiment remains cautious as markets assess the outlook for U.S. interest rates and corporate earnings. GIFT Nifty Futures as of 8 a.m. was trading at 24,300, thereby indicating a flat to negative opening for the Indian markets today. Crude oil prices are trading sharply higher as renewed U.S.-Iran hostilities and disruptions to shipping through the Strait of Hormuz continue to stoke supply concerns. Despite higher production from OPEC+, geopolitical tensions are keeping a significant risk premium in oil prices. Gold prices are trading firm, supported by safe haven demand amid escalating Middle East tensions and expectations that the Federal Reserve may pause further rate hikes after softer U.S. inflation data. However, stronger Treasury yields and higher oil prices are limiting further upside in bullion. HDFC Bank reported a steady first-quarter performance, with net profit rising 5% year-on-year to 19,060 crore rupees, supported by healthy growth in net interest income and a sharp decline in provisions. However, asset quality remained under watch, with both gross and net NPA ratios inching up slightly on a sequential basis. ICICI Bank posted another strong quarter, with net profit increasing nearly 16% year-on-year to 14,805 crore rupees, driven by double-digit growth in net interest income and lower provisioning. The bank also improved its gross asset quality, while maintaining stable overall credit metrics. Reliance Industries delivered a robust first quarter, with net profit growing 6.1% year-on-year to 23,196 crore rupees and gross revenue surging 24.5% to 3.4 lakh crore rupees. Strong operating performance across its businesses helped EBITDA rise over 10%, although margins moderated compared to the same period last year. Following a mixed open for the Asian markets and a spike in crude oil prices, Nifty is expected to open mostly flat with a negative bias today. Levels may be kept the same as what we mentioned in Friday's post-market report, with supports being at 24,300, followed by 24,190, while resistances may be placed at 24,385, followed by 24,480. A consolidation within a range may be expected, with a slight negative bias given the mostly negative external cues. Indian markets may remain volatile as investors assess the outcome of the Q1 FY27 earnings season. Elevated crude oil prices amid persistent Middle East tensions, uncertainty over the U.S. Federal Reserve's interest rate trajectory, fluctuating FII flows, rupee movement, and global technology sector weakness. Higher energy prices, geopolitical developments, and stock-specific earnings disappointments could trigger bouts of profit booking. Strong Q1 earnings from banking and large-cap companies, sustained domestic institutional buying, continued government spending, healthy corporate investment activity, resilient domestic macroeconomic indicators, easing U.S. inflation supporting expectations of stable interest rates, and any moderation in crude oil prices or geopolitical tensions could boost investor confidence and support further gains in Indian equities. On Friday, foreign institutional investors were net sellers of about 376 crore rupees, while domestic institutional investors were net buyers of around 1,018 crore rupees. That's your market snapshot for India on July 20th, 2026. As always, don't forget to like, subscribe, and hit the bell icon for stock market related updates. Wishing you a focused and profitable trading session ahead.